This is the Friday, May 26th, 2017 version of the Market Plus segment. Joining us now is Angie Setzer. Angie, welcome back.
Hi.
Whew. So, on the program, we talked about a lot of different topics, but we did not have a chance to discuss the cotton market.
Cotton.
Bounced off a little bit down this week from that $79 point on the nearby. Where's it going from here?
You know, when it comes down to it for cotton, it's going to be a lot of the same story. You know, I don't even want to say the same story as soybeans, but it's going to be a similar one. The old crop fundamentals are going to be very different from the potential new crop fundamentals. You know, we've seen that increase in acreage already discussed. There's still some talk that we could see further increases in acreage because the prices remained relatively strong. Old crop fundamentals, I would say, are overall bullish. The likelihood of increases in exports coming as we work forward is very good, which means, of course, we're going to have lower ending stocks for old crop, which will carry over into new. So as long as we can maintain good solid demand, I think we'll have a floor in place underneath new crop cotton. But we've got to see what's going to happen with production. And there's still some issues out there. Some heavy rain has really caused some problems with planting and early conditions. There are some areas that look real great too. Okay. So it'll be something that we'll want to keep an eye on. But the reality is good solid demand will likely keep a floor in place under this market overall. But the idea of increases in supply will likely keep it capped without a weather problem. Makes sense.
Makes sense. So keep an eye on the export news, really, for a barometer.
Yeah, watch exports and just know if current prices are driving your decision to plant or did drive your decision to plant cotton and you see a rally happen, don't be afraid to take advantage of it when it comes to new crop sales.
You bet. Our next question is from Jeremy in Lanark, Illinois. He's on Twitter at jflickema. Jeremy wants to know, what if this is a year when we don't rally? What marketing plan should we have in place? His final question is, what's plan B if this is the best we're going to get?
From an overall standpoint, the one thing that at least the corn market will give you is the support will remain long enough for you to get to the point of where you know what crop production is going to look like. Okay. The reality is we should get a production pop in here at some point. Should, of course, doesn't necessarily mean
we're
will.
Drowning in so many places across the Midwest. If that hasn't caused it to pop, on top of continued huge exports, what's going to do it, Angie?
We've got to get trader mentality to change. And the hard part right now is that and I have to be careful how I say it, but you have a group of people who have never grown a crop, and I'm not taking away from them at all, because they are very smart in what they do. But they don't necessarily understand, or the scope is so large that we cannot put our hands on right now what this means. What is unplanted? What is planted in poor conditions? What will need to be replanted? What will need to be replanted for the third time? So there's just this massive amount of information that still needs to be digested by the market. And the problem is the last 2 to 3 years, we have claimed that there have been major production issues due to wet weather. 2015 is the most recent, and we ended up producing a record corn crop that year. You know, most traders will say that for every acre that's damaged by 2 wet conditions, 2 are benefiting. And most years it's very true. However, we've never had wet, cold, we have had. Right. But in recent memory, in the new standard of market trade with the electronic trade and all of the outside information or the outside traders that we rely on, we haven't had a year where, for one, you know, you have planted the crop.
Yes.
But that doesn't necessarily mean that crop is going to have its peak production potential, or that you won't have to replant. So the hardest part is right now we've grown to rely on these crop progress reports. And planting progress is average pace. Emergence is average pace. Conditions per state are very good. I mean, last week, I think the Iowa corn crop was like 72% good to excellent. Yeah. Now, when I drive down the road and I look at corn that I can barely row that looks kind of yellow, I don't know how anyone could say, well, that looks blah, 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 good to excellent. Yeah. I couldn't put my hands on that. I couldn't put my hands on a percentage of emergence. I couldn't, you know. So there's so many things right now that the market is relying on to direct them in what to look to for potential on production that really necessarily isn't there.
Okay.
So it's a very difficult market to be in right now. And it's especially frustrating when you cannot turn a wheel, or you have turned a wheel and you look out and you know that you're going to have to do it all over again for perhaps the third time for some of these guys. You know, it is a substantial issue out there, but it is something that will probably take some time for the market to digest and gain from. But to get back to the question at hand, right now, the only thing you can really do is believe that time's on your side. Now, as we work our way through the month of June, over the next couple weeks, any opportunity that you have perhaps in that $3.90 to $4 December range, if you're nervous and you know that you are profitable there and you don't necessarily have that revenue protection safety net that some do at the 80 to 85%, then you want to go ahead and maybe make those moves just in case we do end up with a decent crop. But to me right now, the best thing I think for most guys to do is to turn the screen off and walk away and you know, maybe glance at it, but don't spend hours staring at it wondering why it's not doing the things that you want it to be doing.
Get some orders into the elevator and turn off the screen.
Target orders are the best thing for you, because the reality is once this market, once the trade catches on to the issues that are out there, we could move exceptionally fast. The fact is there is a reason, a pretty solid reason why they are as bearish as what they are. The Brazilian crop does look huge. Yep. There's a lot of questions though as to what that's, you know, that right now politically the country's a dumpster fire.
Yeah.
To put it mildly.
It's a literal fire in the Capitol. Earlier this week, they burned down a ministry building. Yeah.
And we have seen slower exports as a result because they are protesting. You know, so there's a lot of things there. There's this attitude right now, and I've had conversations this week that, well, as soon as the Brazil crop is harvested, you know, our exports are going to shut off. Okay, you told me that about soybeans too. Yeah. So there's a lot of things in this market right now. I kind of liken it to when you're boiling a pot of water and you see the bubbles start on the bottom, and you know that as long as you keep the heat, you're going to be at a full boil pretty soon. Right now we're at the bubble point.
Okay.
Watch pot never boils. Put your orders in, walk away, and you know, enjoy your family for a little bit is my best advice I can give.
All right, it's a great weekend to do that here, Memorial Day in the States. Now, we've got a question from Roger in Kokomo, Indiana. This one, he's asking, how long will it take and how excruciatingly painful will it be before the world drags land prices back to the pre-bubble, that's what he calls it, level?
I don't know if you ever see the pre-bubble level happen.
Yeah.
I really don't. I mean, God's not making any more land unless we have, God forbid, some volcanic eruption that produces.
I saw a mudslide in California, created about 3 new acres.
Yeah. So, I mean, really, when it comes down to it, you may see some local values calm down a little bit. You may not see the investors come in as much because the rent values have backed off. The biggest thing for a farmer to do, you know, and of course they can't get together as a collective and make this decision, but is to walk away from these landlords that are getting this exorbitant rent on land that's not worth it. Because if you stop making $300 an acre on ground that's worth $150, you may not be in a big hurry to buy more for $10,000 to $14,000. You know, so I think you may see some things calm down to where you're not going to have that aggressive buying at levels that everyone kind of scratches their head about. But the reality is land is land. You know, we're going to continue to see urban sprawl, which is going to be competition for agricultural acres and things of that nature. So I think you'll always see a support under the market now from where we've been, but maybe you won't see that increase in price.
Gotcha. Now, I want to ask you this question because it's a great question that we talk about a lot on this program. This is from Ben in Jessup, Iowa, on Twitter at Ben Renchi. Ben says, quote, the funds are short, something we hear all the time, but someone has to hold that long position against them. If they're selling, somebody is buying. Who is doing the buying, and why do we assume the funds are right?
Oh, Ben, always asking the good questions.
Yeah.
You know, and that's true. For there to be a market, for every short, you have a long. And in most cases, at this point in time, you may have the speculative. There's 2 different kinds that you really want to pay attention to. And when people talk the funds, they're talking the speculative, the speculators, because those are the people that come in and drive the market. People like me are the commercials. And so when I buy grain, I have to sell. And when I sell grain, I have to buy on the board. So most of the time when you see the funds, the speculative funds are short and there's that long offsetting that, many times that is the commercial long.
The people that are actually going to touch the grain at one point or another.
Yes.
Yeah.
Yep. So there are other speculators out there, of course, that are also taking those long positions, and maybe losing on them for the time being. But there are people that will take long positions and hold them for eons.
Sure.
And they just continue to roll in their position. Exactly. So there are the speculators out there that are shorting and will continue to short. For every one of those, there's someone that's coming in and buying. In most cases, or at least recently, what we've seen is that's been the commercials, because the cattle feeders, the ethanol plants, the exporters, they're all buying grain. So a commercial, when I sell to them to offset my risk in futures, I'm going long the board. So that's me, and folks like me are the ones usually holding the longs. And the reason we tend to think the funds are right is because they have the ability to drive the market in a way.
Exactly. So it's not that we think they're right. It's that we recognize they can pour massive dollars behind their positions.
Yes.
To defend or
they're driving the bus.
Right.
Yeah. They really are. They're driving the bus. And the fact is that once, if it's, and everyone will look at the fund short and anticipate that means eventually we're going to see a trigger. It'll be like yelling fire in a crowded theater, and no one will be able to get to the door quick enough. We've seen that last year. We saw that happen, and that's why we saw a 3-week rally of 80 cents or whatever it was. So there is that. But the reason we tend to believe the funds are right is because they're the ones driving the bus.
All right. Now, Angie, before we let you go, we do have another commodity question for you.
All right.
This is from a student at Iowa State University. We encourage all of you students, whether you're college or high school or just a grown person like myself who still considers yourself a student, if you've got a question, get out that phone, send us a video. You can email it to us or find us on Facebook or Twitter, and you can learn more about this project by listening to the M2M podcast number 143. So, Angie, here is the latest installment of our college-level ag student questions.
How do beginning farmers make headway with such high prices in the market nowadays?
All right.
Huge question.
Beginning farmers make headway in the market. It goes back to, and everyone's going to hate me for saying this, but you buy low and you sell high, pretty much. I mean, the high prices, and I'm assuming she means high prices from an input standpoint, high land, high fertilizer, high things of that nature. Really when it comes down to it, you got to start slow. Don't come in and think you're going to be a multi-thousand acre farmer and be extraordinarily successful at it right off the get-go. Learn from others' mistakes, talk to people. Make sure that you're conservative in your risk to get started, and never bet more than you can afford to lose when it comes down to it. But you can get in, you can get started, and look to other resources. I mean, the government, the USDA has tons of resources available. Iowa State University and other universities throughout the country have a lot of really awesome resources for beginning farmers. Reach out to them, and then, of course, if you ever have any questions, I'm always an open book too, and I will be willing to help any of the young people out there when it comes to marketing.
Perfect. We can find you on Twitter at Goddess of Grain.
Yes.
Well, Angie Setzer, thank you so much for taking the time to talk to us this week.
Thanks for having me.
Join us again next week when Naomi Bloom will sit across from me here at the Market to Market table, and we'll explore how catfish farmers are fighting off foreign competition. So until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.